Hi there, Nancy Chapin here with Windermere Mount Baker. It is May 15th, and here is a quick snapshot on what happened in real estate in the Seattle area this past week. Let's take a look at the numbers. Sorry, just taking a second here to get to this. Alrighty, so here we are looking at what happened in King County this last week, and what this chart is doing is comparing the percentage of listing homes to pendings from 2019 to 2020. So you can see that trajectory of where we were at from the first of the year. As far as the early in January, we were right around slightly below par of where we were a year ago for the numbers. And then early February obviously took a big jump up. And then what we really are looking at is what's happened after the stay-at-home order to the further side. Obviously, a huge drop the week of April 1st. Part of that was we had a few days where you couldn't even get into houses at all. And then we have seen a pretty steady climb up from there. And we are at 79% of a year ago with that increasing weekly, which is very exciting. And remember, that is all of King County. So that's covering kind of a wide range of neighborhoods and price demographics. So if you're also looking at it for King County, again, this is residential only, not looking at condos, but it breaks it down by price range. So if you're looking, and what we're also looking at here is the month's inventory. So as it says in the little legend down at the bottom, 0 to 2 months is considered seller's advantage. 2 to 4 months, really there's equal balance supply and demand, and then 4+ months is typically considered a buyer's advantage. We haven't really seen much of a buyer's advantage in the blue for years. There have been periods of time in certain price points in neighborhoods, but by and large, we have been in that under 2 months for a long time. So what's interesting is, especially if you look over here and you're looking at the 7-week averages, we are still in a very strong seller's market. Isn't that interesting? So houses are selling that are going on the market. And as you can see in this slide, that the greater number of listings are going from active to pending more this week than last week. So last week we were at 508. This week we're at 598 with a slight uptick of active houses on the market at all. Again, big picture. So then if you want to dial it down a little bit more to be looking at Seattle residential only, you'll see that we're having a pretty similar trajectory of percentages, again, of how many pendings per actives we had from a year ago. So that is all to say that while we are doing our best to stay safe in this COVID world and abiding by the CDC guidelines for what that looks like, the reality is people are still out buying houses. And if you're looking at it from residential by price range as well, you'll see that we are still, again, in that sweet spot for numbers. Again, depending on sort of right where you're at by price point, it varies a little bit, but mostly you're still around that 1 month. And it is not unusual that when you get in that 1.5 million plus, that those markets, for a variety of different reasons, tend to soften up a little bit sooner in a market like what we've got going on. So really, again, if you're looking at that relationship of pendings to actives in Seattle, and again, oops, sorry, forgot to edit that last little bit from last week's report. So we're still seeing trajectory upward for both actives and pendings. And that pendings is, again, looking at what's going from active to pending within 7-day period. So this is really, I think, a great slide to give you the biggest snapshot of what's going on and what to sort of be expecting as we're moving forward. Is that, so when you look at this slide, so this top line, the 500 to 600 is actually referring to, neighborhoods that are on the east side in Seattle, Bellevue, Redmond, Kirkland, Renton, etc. And in city, obviously in the core area of Seattle proper, and then showing for all of King County. And what's fascinating to me is that we are actually seeing a tighter market this week for this year than we were even a year ago. So yes, the overall percentage of homes is significantly down, and that would be expected. We're in a pandemic, in a stay-at-home order. A lot of people are sort of holding their breath, sitting tight to see what's happening. But for those who aren't, we're really what is going on the market, we are still at sort of a similar position from a supply and demand. So mostly things are hopping. I have a new listing that came on the market this week, and you just have to prepare folks for the fact that in the times that we're in, anything that could happen in the news or changes in our global and political climate could impact people's willingness to be out looking at houses and so forth. But what we're seeing is that even with all the craziness of the headlines on a daily basis, the bottom line is people still need a place to live, and interest rates are very appealing to people right now. Kind of depends on your price point if you're looking at jumbo loans or not. But I would have to say it is a 2 thumbs up time, I think, for buyers and sellers to be out there trying to do their business of buying and selling. So if you are curious about what all of this means for you and your neighborhood and what your future plans are, feel free to reach out to me and let's have a conversation that is more about you. So that's the snapshot for today. I hope that is helpful. I'm going to try and get these out to you guys on a weekly basis so you can get an idea of what's going on in the market. And stay safe, and let me know if I can do anything for you. Take care. Bye-bye.